Hello, folks. Today we're going to be talking about the top 5 ETFs to buy right now in 2022. Let's go ahead and get started with the number 5, VNQ, Vanguard's Real Estate ETF. Currently trading at about $94, $95 right now in July 2022. This ETF currently has an expense ratio of 12 basis points, 0.12%. That's a pretty good expense ratio to have, but as you're going to see in the upcoming ETFs, there's actually better expense ratio ETFs that are available for you to invest in. Now, this ETF invests in stocks issued by real estate investment trusts, REITs, companies that purchase office buildings, hotels, and other real property. So you actually get the benefit of getting into the real estate market without actually having to buy any physical properties yourself. Real estate investment trusts, ETFs, just like this one, VNQ, is a great way for people like me who aren't really down with the whole buying and selling physical properties to buy an ETF that invests in companies that actually do that for you. They're going to be doing the heavy lifting of buying and selling physical properties, from hotels to buildings to other types of real property, so that you don't have to. And that's pretty awesome. That's pretty awesome. And that's something that I actually prefer to have in my portfolio. Now, you definitely want to make sure that you have this type of ETF in a tax advantage savings account, like an IRA or a 401k or a 403b, because there are high taxable events with real estate ETFs or index funds for that matter. There's a lot of taxes that you could be responsible for if you have this type of fund in a taxable account. So I just want to make sure that you're aware of that, because some people like to buy a VNQ or another type of real estate investment trust index fund or ETF, put it in a taxable account, and they don't realize that when it comes time to file taxes, they have a tax bill. So that's why a fund like this or an ETF like this is good to have in a tax advantage savings account, like your IRAs or your solo 401ks or your 401k or 403bs. And the number of stocks in VNQ is 170. So it's great to see that you're going to have exposure to 170 different companies that do this type of real estate investing that gives you even a little better diversification for your portfolio. Number 4 on this list is Vanguard's VXUS. That's Vanguard's Total International Stock ETF, currently trading around $51, $52. Expense ratio is 0.07%, 7 basis points better than VNQ, Vanguard's real estate ETF. This ETF is great if you want to get exposure to companies outside of the US stock market. Some of you like to have diversification, like geographic diversification, that is, and being able to invest in companies around the world is a great opportunity for you to introduce more diversity into your investment portfolio. So having an ETF like VXUS, the Vanguard Total International Stock ETF, is a great asset to have, is a great investment to have in your portfolio. And the number of stocks in VXUS is 7,843 as of July 2022. That number can go up a little bit, can go down a little bit, but just know that you're going to be investing in almost 8,000 companies all around the world. Of course, this is market weighted, so a lot of your bigger companies are going to get the more of the lion's share of your investment, but still, even having a little bit of percentage of each dollar that you invest in that goes into different smaller companies around the world is really a great way to have some diversification in your investment portfolio. So that's VXUS. The next ETF on this list is VOO, Vanguard's S&P 500 ETF. This is one of my favorite ETFs to invest in. Number 1, the expense ratio is 0.03%, 3 basis points. This ETF is on the pricier side, trading at $359.34. So it is a little bit expensive, but you are going to get exposure in the US stock market, the top 500 companies. And this ETF, along with the previous two, are great ETFs to be able to buy and hold for the long term. These are great ETFs to have as a long-term investing strategy. VOO is that S&P 500 ETF that a lot of people like to be able to buy and hold in their portfolio. The S&P 500 is an index that has proven time and time again through the ups and downs of the economy, through the ups and downs and many different challenges that the United States of America has faced. This index continues to thrive and continues to persevere. So if you're interested in having most of your money in an S&P 500 ETF, getting the Vanguard VOO, I'm sure will serve you very, very well. Number 2 on this list is actually a Schwab ETF, the first non-Vanguard ETF, and that's going to be Schwab's US Dividend ETF SCHD. This ETF currently trades at around $72, $73 per share. And this is a great ETF because it is dividend focused. So you are going to get a higher yield out of this ETF. That means for every share you own, you are going to get paid higher dividends compared to some of these other ETFs that I've talked about in this video. SCHD does have a very low expense ratio at 0.06%, 6 basis points. All the ETFs that you can see in this video have a very low expense ratio. I purposely have chosen these ETFs because of the low fees, because I want you to be able to keep more of your hard-earned money and keep more of your money working for you, earning more interest for you. And if you're interested, the current yield for this ETF is 3.44%, which is pretty good, especially for an ETF with a low fee like 0.06%, currently trading at around $72, $73 per share. The number of holdings in SCHD is 102, so it's not going to have as many holdings as the other ETFs in this list, but this is a dividend-focused ETF. It's wise to invest in these high dividend ETFs in a tax advantage account like your 401k, 403b, or an IRA, just like VNQ, that Vanguard Real Estate ETF, because of the tax liabilities that you will have if you have this type of high dividend ETF in a taxable account. I don't know how many people tell you this, but it's important that you keep your taxable events as minimum as possible if you're going to be investing in ETFs in your taxable account. So try to hold investments that do have some taxable events that could cost you, that you might have to pay when you file your taxes. Try to hold those instead in tax advantage savings accounts like a 401k or a 403b. Now, the number one ETF again is still VTI, my favorite ETF to own because this is Vanguard's US Total Stock Market ETF. Currently has one of the lower expense ratios at 0.03%, and it isn't as low as some of the other ETFs, but it isn't as high as a VOO, currently trading at about $195, $196 per share. Now, this is the US Total Market ETF, so you are going to get exposure to most, if not all, the US publicly traded companies. This ETF currently holds about 4,098 stocks in it, so you're going to get exposure to the big companies, the small companies, the mid companies, and these are still billion-dollar companies, multi-million dollar companies that you're going to be investing in. So you have great exposure through this ETF, VTI. It's still one of my favorite ETFs, if not my favorite ETF actually to own, because of the exposure that you're going to get to US publicly traded companies, which again, when we look at the history, when we look at what's going to be happening in the future, the US economy, the US stock market, these US companies continue to thrive and continue to be the leading economy, the leading stocks, the leading companies around the globe. For more videos on how to build wealth and investing education, make sure you check out one of the 2 videos on the screen right now. And remember, this is not financial professional advice. Make sure you do seek a financial professional for any investing financial advice that you may need. I'll see y'all very soon. Peace.